All right, welcome back, traders. This is Even I Can Trade. Thank you for joining me. Wanted to go through something that I'm trying based on a video that I just made a couple of days ago, where it was showing you how to turn 500,000. Excuse me, not 500,000, but $500, growing it into potentially 500,000 someday. But starting from very meager uh, beginnings and turning it into something that you can really sink your teeth into. And I wanted to actually put that into action. So today I'm going to be showing you what I am doing in order to do that and to really show people step by step what that looks like in reality instead of just theorizing about it. But before I get into that, please like this video and subscribe so that you can be notified when new videos come out. This does take a lot of time and effort aside from my regular work to share this with people. So all I'm asking is that you show the algorithm interest in this content so that it can be shown to other people so that I'm not just talking into the void. It's kind of eerie to do that. So the only way the algorithm is going to start showing this in search results and things of that nature is the very few people that do see it show interest and comment and engage with the content in some kind of way. So please, I'm asking you to engage in whatever way you see fit, so that we could start teaching the algorithm that this content is worthwhile to watch. But back to what I'm doing. So what I did, I have here a Thinkorswim practice account. Not real money, but the trades are real, the market information is real, and everything like that. The only major difference is the executions on the trades are a little bit easy. So there's some trades that will get picked up in the sim trading that wouldn't get picked up in real life, but it's fairly close. So I feel comfortable with using this as a proxy here. So I set the account to start at $500, and we're already up to not well, kind of 572. We do have a live trade on, so this may not work out, of course, but if it works out, we'll be up to $572. Right now, the trade is at max profit, but this is all I want for today is about $20, maybe $30. So the trade, unless something really big turns around today, the trade is pretty much already done. It's 10 o'clock, 10:30 in the morning. I put this trade on right around 10 o'clock, and I'll explain why I put this particular trade on. It's a call spread. It's about 50 points away from the market at the point where it was traded. So we've already pretty much hit our goal for today. But the point is, I'm just going to trade with what we have, and I'm going to implement that trade plan that I talked about on that other video where you start with $500, just trade it. And once you get to enough, you add another contract and add another contract and so on and so forth. This beginning part is going to be torture because it's going to take a while to build up another $500 to add to the existing $500. It's going to take about like a month and a half to do so. But it is what it is. This is what you have to do if you want to start from, meager beginnings, which I do suggest that you do, even if you have more to trade with, because you need the experience. So it's very important that you start small so that you can learn what you need to learn, because there's several traps out there like the Fed announcements and triple witching and all that kind of stuff that's going to catch you for surprise. You're going to like, what in the world is what's going on? You don't want to make those mistakes with big money, right? You want to make it with small money. So even if you have more, I still suggest you start small. But anyway, let me explain this trade. So right now we are sitting at the 38.85 level. When you're looking at these, you want to look at when you're selling spreads. The important one is the negative one, the one that you sold. So we're at the 38.85 level. The 38.90 is just a safety for us to define our risk and keep us small and everything like that. So put 500 on the line. Here's the here's today's trading. and I want to go through why I picked this particular strike. So the market opened up, gapped up a little teeny bit right here on this nice green bar, but it ran into this resistance area. It respected the resistance area and bounced off. So I saw this, and I saw stochastics. Looked like the market kind of ran out of steam right as it got to the overbought territory right here, and it started to turn down. Now, normally just a turn down back into the regular area is not enough to substantiate a trade. But what I saw is this nice big red bar here as a rejection, which piques my interest. It rejected off of a pivot point, which also piqued my interest. And at the time, this bar was green. I saw the market wanting to go back up, but it wasn't very excited to try to retrace this red bar. And it was early in the day. All of that told me that the market is unlikely to enthusiastically try to break through this particular area of resistance anytime soon. If it did, it wasn't going to try it in the next few minutes. And since it was so early in the market day, I knew I could get pretty far away from the market with a trade, which I did. 38.85 being up here. So not only are you going to have to break through resistance that you already had trouble with, you're going to have to break through another area of resistance and cover a lot of ground before you start to challenge my trade up here, which usually takes news and some sort of an event to do that, which we do not have today. If you look at the economic calendar, all we really had was pending home sales at 10 o'clock, which is probably where that red bar came from. And that's all we've got today. So there's no catalyst to kind of catapult the market up through all of these resistance areas and this open ground right here. So I've got a sideways to negative bias on the market right now anyway, just because of the current trend. The current trend of the market is downward. If I back out a little bit, we can see we've got a clear downward trend going on right now. So the market has a lot to break through before it's going to challenge this particular area here today. So I felt pretty comfortable getting 50 or so points away from the market. If I put our measuring tape on, I traded probably around this area right here. And at the time, we were almost 50 points away. So felt pretty comfortable with that particular trade with all of that information lining up. And I just want you to see my thought process, how I'm trying to build a case for a trade. I'm trying to build evidence to support the trade. I'm not just trading, right? So that's the case that I presented myself for that trade, and everything lined up enough to substantiate pulling the trigger for me. Now, on the other side, since I did trade that so early, I did leave myself open for a put trade to possibly put on a wider iron condor. So if we break through to this oversold territory right here and a couple of other things lined up, it is possible that I could be putting on a put trade maybe down here in the 3700s, 3750s or something like that. But we'll have to see, because again, my bias is to the downside. I think the market is more likely to go down than it is to go up at this current point. And that, I don't want to be in front of a freight train. So I'm going to have some strong evidence to support selling a put down here, getting in front of this falling knife. Not necessarily falling knife today. It's probably just going to be chopping around. But, since my bias is to the downside, that's something that my evidence has to be stronger or very tight for me to substantiate a put trade, or it has to be a very juicy, far, far away put for me to want to trade, because I've already got a winner on my hands, right? I've already met my goal. I don't want to push too hard or push myself out of a winning position, right? So there's no need to trade a put. It's only if it's just like, okay, I've got to take this. I'd be dumb not to, right? So there's no need to push. But that's what the market is giving me. That's why I made that particular trade. And going back here, I only need to make $20 a day, right, to implement my plan. And it's pretty easy, $20. because the day is already done for me, right? It's already done unless I have a big turnaround. Now, to talk about some of my stop loss and protection, of course, the market could turn around. It's still early in the day. So, the area that I'm going to start looking at, I've got an alert set for the 38 60s, which gives me, 20 points to decide what I want to do with my particular trade. Other than that, I really don't have to look at it because I'm not threatened until it gets to about 38.60 something, right? I'm not even worried about it unless it gets to 38.60 something, and rather quickly, because if it's 1, 2 o'clock and it's in the 38.60s, I'm not really that stressed, right? At 11 o'clock and we're at the 38.60s, that's a different story. So it would take a pretty severe turnaround for me to even look at the market at this point as far as what should I do, what am I going to do, right? And I'll probably close out stop loss and maybe at 38.70, something like that. Give myself about 15 points ahead to either roll, but most likely close out. I'm more of a fan of closing out than I am of rolling. But rolls can work from time to time, especially if they're on the strong side of the market, which this would be. So that's what we're looking at right now. That's why I did what I did. Um, the market is now in oversold territory, but I'd want the market to sell off to probably this low area of 38.13 first, before I even consider putting a put in at this point because we're already in a strong, profitable position. So this is one of those cases where the trade, it was like almost immediately profitable. Only took for like 2 bars for it to get into the green. So very happy trade, and that's what I'm looking at. So again, wanting to build this position up to $1,000. That is my next goal right here, to build this to $1,000. We're going to do that $20 to $30 at a time per day. I really love the fact nowadays that we have expirations on the SPX daily. It really, really, really helps build accounts conservatively, but relatively quickly. Because for the longest time, we only had 3 expirations a week, and before that, we only had 1. So imagine that versus having 5 expirations per week, $20 per week versus $100 per week, and all those opportunities to catch up. It really helps if you do get into trouble and you do have to take a stop loss. It really helps catch you back up quickly, to make up for any losses that you might have. And another thought that I have is we have to really, really be careful, because this is a really baby infant account. So, I mean, we really can't suffer a loss more than, like $100, because you can trade a little bit below 500. But you're talking about like maybe $480 is like the absolute minimum that the account can go before you have to inject more capital into it. So at this point, we're looking at less than $100 loss that we can suffer as far as a stop loss, to keep the account going as is. So we have to be really, really careful not to overtrade, not to do too much, not to get ahead of our skis, to just take what's there and pocket what's there and leave it alone. That can be a very hard thing for a trader to do, to just leave well enough alone, walk away, take the win, and leave it at that, come back tomorrow. So I want to set that pace early as well and just be happy with a meager little profit. This is not a little profit, by the way, in percentage wise, but $20 is $20, right? In your mind. So we're just going to take this win. I'm probably just going to shut it down and do other work and let my alerts do the worrying for me. But just wanted to walk you through that. And we're just going to repeat this as much as we can and try to be as safe as we can and stress-free as we can with this until we get to our $1,000 goal. Then we'll worry about that when we get there in about a month and a half. All right, y'all, I got a quick confession to make. I'm not proud of it, but that put I was telling you about, I did trade it, and it was a little early, but I have a reason. I have a reason. Um, so we can see where the day is right here so far. It's about 11:33, and I traded at about 11:10. Sold a put, but I sold a put below R3 here, resistance level 3 on the pivot points. And I love getting trades below R3 because the likelihood that the market is going to stay below R3, super, super unlikely if you look at the history. Below R2 is way more common, but not as common. This is like 20% chance to hold below R2, but to hold below R3 is astronomically low, like very, very low. Like you're talking in the single digit percentage chances here. Um, so I saw a chance to get below R3 on my trade, which I did 37.60. That's going to put our trade, I think it was, I was going for 15 cents. The sim software I think gave me like 25, but I'm going to count it as 15 because I saw a 15 couple 15 prints on the bid. But anyway, we got below a trade below R3 for the day. And my logic behind that obviously is it's below R3. We're already in oversold territory. We weren't getting like huge bars, continuation bars or anything like that. So we were going to get at least a pause before any kind of continuation downward, which tells me that we might have some trouble breaking through R2 right here. If R2 can block us, like a lineman in the NFL, if it can block us right here, stall for time, then it's going to start to run out the clock before we can continue on down to past R3 and stay there. And even if we got to R3 territory, the likelihood that it's going to bounce and recover after being so oversold on a non-day seemed very high to me. So I went ahead and took a risk by getting in below R3 while I could, while the day was early enough before theta started to eat up all of the trades down here. Because you have to think of theta as kind of like a cone, that the closer that you get to the end of the day, the more of this premium that it's going to eat up down here. So even later on in the day, if the market is down to like 37.85 or something like that, there still might not be a trades below R3 because theta is eating up so much of the day. So it just so happened that I did catch a nice trade below R3, even though my stochastic rule hasn't been met, and a couple other rules haven't been met. That R3 to me kind of trumped that. The time in the day kind of trumped that a little bit, and it is a risk. And I didn't have to take that risk, but I thought it was juicy enough to go ahead and take that risk. Where if things start to look ugly, I can get out of it and take a small loss on it or whatever, and just smack myself on the risk and know better for next time. But I'm 50-50 on it. I think the trade will work, obviously, really. But as far as the risk level of it, I'm kind of 50-50 on whether I should have done it, whether I shouldn't have done it. I really should have just closed out and coasted through the day. But I'm trying to work on that. It's something I got to work on myself as well. But we got a nice wide iron condor at this point. Right now, I am 40 points away from the market, so I'm a whole percentage point away. This trade is basically a done deal. That's you don't even have to look at that anymore. But 40 points away after the market has already dropped, a fairly significant percentage for the day already. We haven't had really any kind of the bulls haven't really taken their turn today at all. So we could still have a rebound during midday or something like that after lunch, whatever, for the bulls to take their turn. But just wanted to show you guys that because iffy on this trade. I understand that it may not work out. It's kind of 50-50 to me. Really, what I really should have done is waited for this to curl back up into the purple area as far as stochastics, then look at a trade. But I just didn't think that I would be able to get an R3 trade once by the time that happened. So I went ahead and got in early, and I acknowledge that it's early, and we'll see what happens with that. But there's that trade as well. So that'll hopefully get us ahead of the game if it works out. Kind of on the fence whether I should have done it or not, but I did it. So there we are. All right. Don't be like me. Just stick with your win when you get it. Okay. All right. Later.